All right, today we're diving into a fascinating market puzzle. We're looking at the stock BYND. Now, this one's been through a really brutal downturn, but suddenly it's showing some incredible signs of life. So the big question is this the start of a huge comeback, or is it just a flicker of false hope? Let's dig into the clues. So just how far has this stock fallen? Get this. It's currently trading at only about 7.5% of its 52-week high. I mean, wow. Whenever its stock gets pushed down this close to its historic lows, it often sets the stage for a really dramatic turning point. The question is, which way is it going to turn? And yeah, that right there is our central question. We're going to approach this whole thing like detectives, sifting through all the technical clues to figure out if this is the beginning of a real sustainable recovery for BND. So to kick off our investigation, we've got to set the scene. And right out of the gate, we find a major conflict in the evidence. It's a real tug of war between what's been happening recently and the long-term history of this stock. This slide just lays out that conflict perfectly. On one side, you've got the surge of short-term hope. We're talking massive trading volume, sharp price gains. But on the other side, the long-term picture is just filled with doubt. You see, key indicators that track the flow of money have been negative for a long, long time, which suggests way more money has been flowing out of the stock than in. It's a classic showdown, a recent explosion of buying versus a long history of selling. And this is why traders are starting to get interested again. The analysis points out that the risk-reward ratio is now 1.23. So, in simple terms, what that means is that because the price has fallen so far, the potential profit if things go right is actually starting to look bigger than the potential loss if things go wrong. It's a mathematical reason to start paying very close attention. Okay, so with the scene set, it's time to follow the trail of evidence. We're going to dive deeper now into the specific technical indicators, and we're going to treat each one like a clue that's going to help us solve this puzzle. You can think of these simple moving averages, or SMAs, as a series of hurdles the stock needs to clear. And look at this. It has successfully jumped over the 5-day, the 10-day, and the 20-day hurdles. These are all really positive signs. But now it's approaching its next big test, that 25-day average at 1.06. All right, before we get to our next clue, just a real quick definition. We're about to look at the MACD. All you really need to know is that it's a momentum indicator, and when its two lines cross over each other, it can signal a major shift in the stock's direction. And here it is. This is a huge piece of evidence for the bulls. The MACD line has crossed above its signal line. In the world of technical analysis, this is a classic buy signal. It's a really strong suggestion that the momentum has shifted from negative to positive, at least for the time being. And the positive clues just keep piling up. We have multiple other indicators telling a very similar story. They show that the buying momentum is strong, that the price is rising without a whole lot of resistance, and that the stock is finally moving out of that oversold territory. All of this evidence really supports that MACD signal, painting a pretty consistent picture of a strong short-term recovery. So, we've gathered all this evidence. We've got this conflict between the long-term past and the short-term present. But a lot of the recent clues are definitely pointing up. So, based on all of this, the analysis lays out two very different paths this story could take from here. Okay, here's how the two potential futures break down. The bullish scenario gets triggered if the stock breaks above that resistance zone of 1.12 to 1.15. If it does that, potential targets are 1.26 and then 1.29. Now, the bearish scenario takes over if it fails to break through that zone, which could send it right back down to test support around 1.01. So the key takeaway here is pretty clear. Everything hinges on that 1.12 to 1.15 price level. And this brings us to the final take from the analysis, the conclusion of our investigation. It boils all this complexity down to the single most important factor that everyone should be watching right now. And here it is. This quote just crystallizes everything. There is a dense zone of resistance dead ahead. You can almost picture this like a wall that sellers have built. A successful breakout above this wall is absolutely crucial. If that doesn't happen, this whole rally could just fizzle out. The entire battle is being fought right here, right now. So let's simplify it even further. Within that zone, the single most critical number to watch is 1.12. A strong, decisive move above this price, especially with that same high volume we've been seeing, that would be the confirmation that the bulls have won this battle and that this recovery really has legs. Which leaves us with this final, tantalizing question. The clues are all there.
the battle lines are drawn, and that short-term momentum is just undeniable. But after such a long and painful decline, does this stock truly have enough power to break through that wall of resistance? Well, the answer is going to unfold in the days to come. Thanks for watching.